I'm Jim Jubak, and welcome to my YouTube channel for JubakPicks.com and JubakAM.com. After this is all over, please remember to subscribe to my channel and to like this video, if indeed you did. Today, I'm wearing my traditional Toledo Mud Hens hat because I've had multiple, well, actually one request to bring back the hat, so I did. Today I'm going to talk about points and lines, two really important things in investing, and I'll talk about that in relationship to Apple, Microsoft, Intel, and a couple of other tech stocks. The point is that this fall, October or so, Microsoft announced that it was ending its 15-year relationship with Intel and that it was going to start using its own M1 design chips based on a design from ARM Holdings to power its Macintosh line. Not all of them yet, but the bulk of the line and all the laptops. And Apple came out and said, well, we're doing this for a couple of reasons. One is that they're better battery life, they're faster, we think the performance is better. But the bottom line for the corporation is that, well, it gives them more control over what they're doing. It gives them a way to differentiate their products from other companies. Okay, that's one point. Second point, a little further down the road, and that's where we get into a line, making up a trend, is that Microsoft announced that it was working to develop its own chips for its line of servers. These would replace Intel's Xeon chips, which would be a big deal for Intel because its server chips are really the most profitable part of its chip line. So not immediately, but again, Microsoft says that it's going to move away from them and probably use a design again based on ARM Holdings work for intellectual property. So what you've got here is a trend, and the trend is important. The trends in technology investing or in technology in general tend to run for a fairly long time. I remember the days when everybody started to become a fabless, and they decided they weren't going to run factories, and they were going to be chip design companies that would then farm out their chip manufacturing to either Intel or Taiwan Semiconductor Manufacturing. That was one big trend, led to a whole slew of new companies. So I think we're seeing another trend. And one of the important things about this is that what you're looking at is so much of the computing world has become commoditized, that you're looking at companies trying to avoid that because commodities don't earn as big a profit margin, and they're relatively easy for competitors to disrupt. So you're seeing Apple and Microsoft bring these chip designs in-house, A, to save money, B, to make more money, but C, and what's really important, is to give them a differentiator in the world of selling servers or cloud services or computers. So that's going on, and while that's happening, I think you really need to look at the potential for it affecting a couple of other stocks. NVDA, which is the big maker of server chips, massively parallel chips based on its work originally with computer gaming, and then also Qualcomm, the big modem chip maker for cell phones, etc. It's interesting, and this sort of extends the line a little bit, that NVIDIA recently went out and made a huge offer to buy ARM Holdings from SoftBank, the Japanese venture capital firm that owned it, for about $32 billion. And one of the things that means is that they too see this same move that Apple and Microsoft are seeing, and they're trying to give themselves a leg up by giving themselves access to all of this ARM intellectual property, so they can design their own chips, be faster and cheaper in the server world, and break further into that because they want more share and take it away from Intel. Qualcomm is also a potential disruptee, although I think that while Apple has been hiring modem engineers, many of them with Qualcomm backgrounds, it looks like we're talking about a longer time period before anybody gets serious about displacing Qualcomm chips from cell phones. And so I think that's a big difference there. So if you want to look at these stocks, we'll look at some charts now. You'll notice Apple's been on quite a tear recently up here. One of the things that's really interesting is that if you're looking at a stock to buy in this market, one of the things I'd really look at is the distance between the 50-day moving average and the 200-day. This is very short-term support. This is longer-term support. The bigger the distance is between these two, the more risk there is in case we do get a downturn in this market, we do get a correction out of this stupendous rally. Here you notice the gap is really pretty wide. Apple is up, well, what about 81% in the year to date. And Morningstar, which does this calculation that figures out fair value, calls the stock about 55% overvalued. If you look at Microsoft, what you see is a similar pattern, but you've got more of a sense of consolidation going on here, where we're moving laterally, and the gap between 50-day and 200-day isn't as wide. You still got a big gap, but if you were looking at one stock to buy in this group, I would pick Microsoft as opposed to the others. I own it in a couple of my portfolios online. And one of the reasons for that, I think, is you got less danger to fall. But also, Microsoft has been a big beneficiary of the move to servers and online and cloud that has been accelerated by the coronavirus pandemic. So I think there's a lot of really short-term good news to come out in the next quarter or two in earnings. Okay, contrast those with, I have to bend forward to see these, Intel. Where we've got a stock that's clearly in a downtrend, has been for a while, breaks through support here, and while Morningstar is saying that this is a stock trading at a big discount, I'd have to question that. I think in terms of past trends, Intel is underpriced in terms of if Intel is going to sell chips the way it used to. But it's a company with significant problems with customers, as well as some very important manufacturing issues. It's important to note that when Apple came out and talked about its new M1 chips and the lines beyond that, it talked about how they're going to be made on 5 nanometer technology. Intel has had trouble getting down at 7 and 5 and manufacturing chips efficiently. So this is another big plus for Taiwan Semiconductor, which is the foundry that Apple uses. In fact, that almost everybody uses. This is the biggest chip manufacturer now in the world. If you're looking for a stock to watch long term, I think maybe putting a little money into that on a dollar cost averaging basis would be better. Okay, we're going to now look at NVDA. You'll notice again, huge gap between the stock is sort of consolidating at near-term support, but huge gap between that and further support. What I would say about this one is that you're looking at a stock that's building a decent trading base up here for another step up. You notice that it's down from a couple of these peaks, so getting a lot of lateral movement. The risk here is a market risk, that if the market turns, there's a long way to go down here. If the market doesn't turn, this is a stock that is then looking for another up leg and might get it out of earnings. And the last one is Qualcomm. Where you've got a stock that's just zooming, because Qualcomm is seen to be one of the big beneficiaries of the transition to 5G in the cellular world. So the stock is just rocketing here. You've opened up a really big gap in between. So here I think there's a fairly decent amount of stock-specific risk, because 5G may not develop as quickly as investors were expecting. So the stock may have gotten a little ahead of themselves. If I were looking around for something to buy here, I would think about maybe buying Microsoft and dollar cost averaging in. I think Microsoft has got a good headwind over the next couple of quarters. So if you're looking at for a technology stock that is fully priced, Morningstar says it's fairly valued right now. Of this bunch, I'd say Microsoft is the one to look at. Going forward, I really like Apple, but right now it's and NVIDIA for that matter. But right now these stocks are too pricey, too much risk in them. I'd hold off a little bit on them. So Microsoft in the short term, those two stocks in the longer term. This is Jim Jubak for my YouTube channel on JubakPicks.com and JubakAM.com. Check out those sites. The first one, Jubak Picks, is free. The other one is a subscription site. And remember to subscribe to this channel and to like this video. Thanks for watching.